This is the Brazoria County Minute. And now the host of the Brazoria County Minute, Christen English.
Hi, I'm Christen English. I'm a local real estate agent, and I'm here at the Alden Dow Museum in downtown Lake Jackson. And my guest today is Brad Summers. You want to tell us who you are?
Yeah, hello, my name is Brad Summers. I am a loan originator with CMG Home Loans. My primary responsibility is to help people find mortgages for potential home purchase.
Okay, so when people are thinking about buying a house and they want to, get that going, they'll contact me typically, an agent, right? So if they call me and they're like, hey, I'm thinking about doing it maybe 6 months to a year from now. Sometimes people want to do it right away, but if they're trying to be proactive and think about the future. So my first step is I'm going to send them to someone like you.
Right. So,
and why? Because they need to start preparing. What do they need to do?
So ideally, what we would need is we would need you to come to us a year to 6 months early, because a lot of times there's little things that we can clean up that helps you get there. There's really four things we're going to look at. We're going to look at your credit score. We're going to look at your income. We're going to look at your debt to income ratio. And I'll explain that in a minute. And then we're also going to look at what assets you have, what cash on hand, savings accounts, retirements, and things like that, to prepare this whole package so that we can approve you for a loan. And so if you come to us 6 months early, there's things like, credit score cleanup that we can help. And the cool thing about credit score cleanup is even if you have a decent credit score, like one that will qualify you for a mortgage, if I can get you up 20 to 40 points, you could actually qualify for a better interest rate, which overall helps you out on your mortgage
can
payment.
make a difference on that.
It does make a difference. And right now, interest rates are a big deal, right? Everyone's concerned about interest rates. Everyone's thinking about interest rates. So I got a quick story. It's somebody that came to me, 3 months ago, had a 560 credit score. I gave them a few tweaks, nothing outside of the norm, nothing crazy. And 3 months later, they were at a 630, which was a qualifying score, which before they didn't qualify 3 months earlier, and then they can qualify now.
Well, let's talk about credit score for a little bit, because I see this happen a lot where people think their credit score is one thing, and then once they fill out the application and start the process, it's different. Can you explain why that might happen?
So for one, we use FICO credit scores, and then what we do is we query all three credit bureaus, and then we take the middle one of that, and if that'll be your qualifying score. Now, if you're married or you have a co-borrower, we'll take 3 from the primary and 3 from the co-borrower, and then we'll take the lower of the middle. So let's say you're applying with your spouse, you need to know what their credit score is also. And so that's how we come to that qualifying credit score.
Okay.
So.
Yeah, and I think that's another reason why don't just assume, oh, my credit's good, because it may not be exactly what you think, or it might be not what you're looking for. So
right, and the way the credit bureau works too, there's different filters depending on what loan you're applying for, right? So you have to kind of think about that too.
Yeah,
the credit bureaus they're complex for a reason. They're complex because they want to be complex. So.
Yeah. We gotta do what they want.
We just got to do what they want because
exactly.
they control whether or not we get credit. And so because they have this score system, and this score system is what it is. And they're pretty secretive about how they calculate and manipulate things. But yeah.
Okay. So we can't talk about that anymore on here.
We could. I could spend hours talking about it. I could give you my whole thought process and opinion on it. I just don't feel like this is the platform.
No, everybody doesn't want to hear that. Okay, so what are some of the other things you're going to look at besides credit score? Your income, your job. People ask me questions about how long should I have had my job? What if I've switched careers? What if I've been in school? What are some of those kinds of things to look at? This
is definitely another reason you want to reach out to a loan originator, because every scenario is different. Again, I had a scenario where somebody went from, a fixed income, which is what we want, what we desire. That's the perfect one, is a fixed income where you have a W-2 and you work 40 hours a week and you get paid the same, and there's no overtime or anything. Calculating that is the easiest way to calculate income. But then we have all these people with all these overtimes and everything. But then they went to what we would call variable income, where they weren't receiving 30 hours a week, and they were receiving different pay depending on what they were doing. So different hourly pay depending. So over that, when you have variable income, we have to calculate that over a period of time. And it's 24 or 12 months depending on how we're going to do it. But then she went back to a fixed income. So once we went back to a fixed income, we were good to go. She maintained the same line of work the whole time so that so we were able to use that fixed income to get her qualified.
Okay.
So,
And so that, like the whole, like what you said about maintaining the same type of job, like what kind of timeline do they look at as far as like how long you've had in that line of work?
It's typically 24 months.
Okay.
Ideally 24 months. But again, there's other things that come into play. Let's say you were going to school for an accounting, and then you found an accounting job after we were able to use that school time as the work time. So if you're thinking about buying a house and you think you're in a good, again, just reach out to a loan originator. Your scenarios, we have so many options, and so it's to get you into a home, or at least get you on track to get you into a home. We might not be able to get you in a home that day, but at least I can give you the information,
right,
so that you don't make a bad decision, which pushes you out another year,
right,
or another 24
Well, because I
months.
mean, I've seen it happen both ways, where someone just assumes they can't get a mortgage, and
Right.
they absolutely can. And people who just assume they can, and then they find the house they want, they go to apply and realize, oh, they need to do a little work. They need 30, 60, 90 days to
Right.
be ready. And if they would have prepared ahead of time, then they would have been ready to go.
It's amazing what I can do in 6 months. It's crazy what I can do in a year. Like, to
Especially
set you up
with
for
someone
success.
who cooperates.
Somebody who cooperates,
Yeah.
and that's
it's
the
important
big
to do
thing.
what you're told. You can't
Yeah.
make it happen if you don't do the work.
I tell people, you're applying for, most of the time, like $250,000 to $500,000. We're about to give you $250,000 to $500,000. There's going to be some work on your end. I'm going to require you to give me some documentation, answer some questions, be prompt by that, so that it happens every time. And they'll apply on Thursday. I'll ask for the docs on Friday, and the realtor's calling me on Saturday evening asking for a pre-approval, and I don't have the documentation. And now I'm in a bind, right? Do I send the pre-approval or pre-qualification without looking at the documentation? Or do I tell the realtor no? Oh, and it's always a multiple offer situation.
Yeah.
So if they would have got me the documents Friday, I'd have had everything cleaned up, everything good to go. Pre-approval, pre-qualification letter would have been sent in the
And that's
inbox.
why it's so important to just, start preparing. So what about like debt to income ratio? What are some of the numbers that look for?
So debt to income ratio, there's two numbers that we look at, and we call it the front end, which is your principal and interest, taxes and insurance, and then if you have HOA or anything like that. And that's the front end. So that's just pretty much your mortgage and all the fees tied to your mortgage. And then we have the back end, which is your mortgage plus all the current debt, monthly debt that you have. I have people call me all the time, and they're like, I'm $60,000 in debt. I can't get a house. But their monthly payment's only $500. Okay, well, I'm only using that $500. You don't have any other debt. You don't have any other credit card debt, anything. So that's only getting added to. So we're not concerned about how much credit card debt you have.
It's the monthly payment.
It's the monthly payment. That's
Can
what
you
we're concerned
afford your monthly payments to what you already owe,
Right.
in addition to a mortgage payment?
Yeah. So that's what we care. It's only the month to month. It's not the total. So I know people freak out about that. I get that question a lot. It's your monthly payment, and it's a calculation, right? So the front ends, in the 30s, and the back ends in the 40s to 50s, and then you also have to realize it's not a solid number, because that number's built off of a calculation that includes, are you a first-time home buyer? Do you have reserves? How much money what percentage of money are you putting down? Are you using a DPA program or something like that? So there's more to that calculation than just your DTI. So when people call you, you're like, what's my DTI need to be? Well, I can't tell you. I actually have to run it through the software in order to actually see what your DTI is.
Yeah.
So, or what your qualification is.
So you mentioned like reserves, and so that kind of leads to how much money should someone be prepared to have put away. People are finally starting to understand, I think they don't need 20% down anymore to buy a house. So, what should someone not apply just because they don't have any reserves? Or
No, not at all. I have people getting money back at closing depending on how the contract's written. Now, that's a little misleading. And I say they're getting money back. They're getting the money that they've already put up front. They put up earnest
so you still
money.
need some money.
You still need some money. So you're going to put up.
You can't put a contract on a house with like $2 in your bank account.
No, you're going to need closing costs and you're going to need a down payment. And the down payments can range anywhere from 3% to whatever you want it to be. I had somebody put down, $170,000 on a $250,000 house. But 3% is typically lowest. Now we do have, down payment assistance programs, and those are limited by income. We do have some that aren't limited by income. They typically come with a little bit higher interest rate, and there's some other factors there. And if you're needing down payment assistance, we really need to sit down and discuss what it is, what you're getting, what type of down payment assistance you're getting so that you're comfortable with the terms of that.
Right.
We also have USDA. I'm closing on a USDA next month. That's 0 down payment. And that also, there's some restrictions there as far as where the property is. So we have to look at that. And that one, USDA is a difficult one to get because the DTIs are really low. So when I try to give somebody a DTI number, it really depends on the loan vehicle also, whether it's conventional FHA or USDA, VA, or non-QM. So
there's just so many different variables, and each situation is unique in itself.
Right.
And so that's why it's so important to just not make assumptions one way or another, to just go ahead and get started, get a plan, start working through all of that. And sometimes the hardest step is just making the phone call or filling out the application. I know for me, that's where I always get stuck, is doing that sort of thing. That feels like the hard thing for me.
Right.
And so I know it is for a lot of people, just to make that initial contact and get started.
And the reason I'm in this is more for education than anything. Like I desired to be a teacher. I really did. I just couldn't bring myself to deal with the school system. I like to teach. When I was in the military, I ran a bunch of different courses, and I was constantly mentoring and constantly teaching and constantly bringing people up. I've been in real estate for a very long time. I'm very passionate about it. So when you call me, I'm going to do what I can to get you there. I'm going to explain as much as I can to provide the information so that you're an educated buyer. I mean, even if you call me and we have a conversation and you don't buy a house, you're going to walk away with something. You're going to walk away with some information. You're going to walk away with a better understanding of what it is. I don't know why we will dissect a frog in school, but we won't teach somebody how to get a mortgage.
Because pretty much everyone's going to buy a house at some point in their life.
Pretty much everyone's going to buy a house, and it's a very complex. It's a very complex system, and it's got a lot of moving parts. There's a reason it takes 30 to 45 days to close. It's not because we're just sitting around waiting. It takes that long to calculate the numbers. And trust me, I look at it all the time and go, this process should be a lot simpler, but it's not, just because of all the moving parts, all the different things that need to be brought in, title, insurance,
Right.
taxes.
There's so many different people and everything involved.
There's so many different people in everything, and it's such a difficult transaction. One reason why it's always good to have a buyer's agent, right?
Right.
So when I hear people all the time, well, I can sell or buy a house by myself. And I know people that have done it, but if you don't know what you're doing, you can easily get yourself in a bind. You can easily get to a point where you want to back out of the property, but the contract wasn't written right, and now you're going to lose your earnest money, and that could be very significant.
Right.
And not to mention you probably paid for an appraisal, a home inspection, maybe a survey, and now you're losing all this money because somebody wasn't there to protect you. And if somebody's there to protect you, they're going to write the contract.
Right. In your best interest.
They
should be writing it in your best interest.
In your best interest. They should be right. Yeah. I think most of them do.
I do. I do too.
I think because I think most real estate agents like to win. They like the W, so they fight for their clients. Yeah. They really do, which is really awesome. So they're there to fight for you. They're there to help you out. So that's always a big deal. So.
Okay. So sum it up. We just need to plan ahead, be prepared, get going, do what you need to do, and then once you're pre-approved, you got your letter, you're ready to go. Then contact your real estate agent, start house shopping, and buy a house.
Yeah, and I just cannot stress enough: don't be scared to call your loan originator. We're not here to go through your finances and dig through everything and make you feel bad about your current situation. we're here to help.
Right.
We're here to get you in a house. And I've said this 1,000 times, and I'm going to say it 1,000 more. Homeownership matters, and it changes people's lives. And you just have to reach out to those people that are here to help.
Yes.
So,
Yeah. Because I mean, that's why we're in this business, because it makes a difference.
It,
So,
it really does. And the science, they have statistical data that proves it.
Yeah.
Like it's mind blowing that people who own homes make more money. That's just the reality of it.
Yeah.
So
no, it's a very, personal sort of emotional thing,
It really is.
Yeah. I had a couple recently get pre-approved, and they were just so happy, and, just sharing their joy over it. And I feel that for them. It's a big deal.
because they probably didn't think they were going to get approved.
Right.
And then they reached
right.
out.
That's exactly what happens. Yes.
Somebody helped them out, got them there,
Yeah.
and then they got approved. So.
Yeah. So they didn't let any obstacles get in their way. They pushed through. They got it done, and now they're on their way to buying a house. And so
That's
it's
awesome.
a beautiful thing.
Yep, that's awesome. And
that's why we're here.
Win. Absolutely, that's why I'm here.
Okay. Well, thanks for coming in today and walking through this with us.
Awesome, thank you.
The Brazoria County Minute is brought to you by BeRemembered.us. Tell your story. Be remembered.